In this video, I'm going to talk about a very simple 5-minute scalping strategy using stochastics and a moving average. Stay tuned. Hey traders, a very warm welcome to you. Okay, so this strategy, again, dug it out from the depths of the internet to share with you so we can run through it together and see if it's something that potentially we can make some money from. So 5-minute chart I have up here. It can be used on any of your major currency pairs, so Euro US dollar, Pound US dollar, Aussie dollar, US dollar JPY, probably GBP JPY, etc, etc. Nothing too thin. So I have even up here a 200 period exponential moving average. I also have a stochastic on reasonably standard settings of 1433. You can be flexible with this, but you'll see in a second what the whole criteria is. So the whole point of the 200 period moving average is to dictate, or to define, should I say, the trend. When the price is above it, we want to be looking for longs only. When it's below it, we want to be looking for shorts only. Okay, so that's the first step, or the first filter. The second part of the filter is, if the price is above the 200 period moving average, we're now looking for the stochastics to go oversold. So it's the other way around. So price is up, stochastics go oversold. As soon as they start turning up, we go long. We go long with a 10 pip stop, 15 pip stop, something reasonably tight relative to the ATR of the day hours, the true range of the day, so take into account volatility. And then we've got a target of 2 times the risk, 3 times the risk, something like that. Again, this is where the flexibility comes in and where you sort of make a decision as a trader as to how you want to manage it. But it's very much a scalping strategy. You're in, you're out. You're probably not looking for longer term stuff. So let's look at an example. So we've got a 5-minute chart here. This is pound, yen. One of the ones that you could use it on. We'll have a look at some more in a second. We're above the 200 period EMA, which is the blue line here. And we get an oversold condition coming down here with the stochastics, oversold. They start to turn up. So we're long about this candle here. And what is that? Let's look at it for the sake of it. So it's closed 148.56. And that's going to give us, that's giving us probably a 10, 15 pip profit. Very nice. And in fact, we could probably go one step further. I don't think it says it in the rules, but we could say, hey, you know what, as soon as it goes overbought, goes overbought on the stochastic, close it out. So there's one that's fired off there. Let's see if we can see let me get the right drawing pen up for you guys. There we go. Get rid of that. So another one we could look at here is, let's try this one. It's like a loser to me. 200 period moving average, go below it, come back up, first overbought. What have we got here? We are going in at 147.75, and if we have a 10 tick stop, or what's the actual low? What is it, low? You're probably not going to get a field on that if you're going for many multiples of your risk using 10 ticks. You want at least 20 ticks on that. Doesn't look like you've got a field on there. So there's a stop out. What else have we got? We've got a little one here. Probably too late in the day to take that. Wouldn't be that excited about that one. This one's interesting how it keeps you out. So 200 EMA, it comes back, we go oversold, but we're below it, so we don't take it. We have to take only overbought when we're below it. Let's flip to something else. Let's flip to something else that is a bit of a crowd favorite, like Euro US dollar. Again, we're on a 5-minute chart, guys, and it's a 200 period EMA. This is not a bad one we've fallen on here. The point is, and if you think about what it's trying to achieve, it's trying to say, hey, listen, it's moving average stuff is never going to be that great in a range bound market. You're going to get pinged and ponged and ponged. You're going to get pinged out of your stop. You're going to get stopped regularly. It's not going to work that well for you. But if you're in a trending environment, this makes a lot of sense. So here, good example that we've stumbled upon right now. 200 period sloping down, so we're looking for shorts only. Now, we take the short on the overbought condition on the stochastic as it crosses back down. So it turns. It's not the first time it steps overbought. We let it run. When it curls over, then we go short. We use our stop. We put our target in. So we're short here. That coincides with here. That's going to be a nice profit for us. We're short about here. That coincides with here. That's going to be a nice profit for us. We're short again. Probably here is the crossover point or turnout point, which is there. That's going to be a nice profit for us. Again here. Again here. I mean, this is looking pretty good so far. Here we've got one more. That's going to be a stop out, isn't it? Because we're probably not going to quite get it. So that's a stop here. Then we get another overbought here, but we're above the 200 periods. So we don't get a trade. So we have, 1, 2, 3, 4, 4 good trades on that and 1 stop out. So that's a nice kind of day. It's not a, I think I like this strategy to use it when if you pick a trend day. You don't get sometimes get a trend day on the Dow. You sometimes get a really good trend day in your currency pairs where you want some kind of framework to get on board. This is not a bad way to do it, guys. I quite like this. Let me know in the comments below how you would amend this further or tweak it further. But to try and eliminate the kind of chop stuff, maybe you want a decent extension from the moving average, something like that. Maybe use a different period moving average. I'll be interested to know what your thoughts on that. But it's not a bad way to trade it. 5 period is a scalping system, waiting for, you've got the trend, you're waiting for the little pullback, and using that overbought, oversold condition on the stochastic to give an indication that that pullback's ended. So I like this one. Good stuff here. Something to build on, something to think about. Anyway, guys, good trading. Take care. See you in the next one. Bye-bye.